following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back. I hope you like all over the place. I hope somebody out there likes that, because you're definitely in a fantasy world right now. Euphoric world. These S&Ps, honestly, I was trading very heavily in 2008. Past couple of days, this has been quite amazing. And let me get my screen straightened out here. Sorry about that. Get these taskbars out of the way. I've got the S&P daily up right now. And, these bars, I'm speechless, actually. To have 100-point S&P swing days, top to bottom, and even more so, I don't have to tell you this, quite amazing. But, what's the net result of this? That's what we want to talk about. And we want to talk about how to take advantage of this, hopefully. I'm finding myself waking up every hour and rolling over, look at my cell phone and check Bloomberg quotes. If I do happen to lay down, that's the kind of environment it is. And as a trader, you don't get this, maybe a couple of times a decade, if that. And when this is happening, guys who are sitting around and, for the investor, it's an awful nightmare. But for guys who are trading, it can be fruitful, all right? But you've got to play this type of environment, in my opinion, very light. You got to keep the powder dry. And that's really what I wanted to say after all the things I've said so far. Because, if you get in heavy and you don't have a way to correct it, and if you're wrong and you are not placing stops in a relatively stingy manner, in my opinion, you've got to be pretty relaxed with the stops right now. But therefore, if you're relaxed with the stops, you've got to trade lighter. Trading a one lot right now can be extremely profitable. I've got a couple of guys, Juan, who I've had on the show lately. He's picking up 10, 12 grand a day on an automated system trading a one lot. So he's, the margin is 5K or whatever it is right now in the S&Ps. And the reason that that's the case is he's very stingy on the stops. And when a move happens, your risk reward scenarios are really, on the automated system, you can be relatively stingy on the stops. But when a move happens, that momentum swing one way can yield 5, 10, 15, 20 points at a clip without actually relaxing too much. So those automated systems, too, by the way, are using exclusively the information that we talk about every day. And the information that we talk about every day is, what's the tide of the marketplace, using the scanner, and I'm pulling this up right now. The three things are, what are we looking at as far as bias directional component of the broad market itself? Where are the inflection points on that broad market, as exemplified by these cells and the inflection points that we can mouse over with the S&Ps here? And if you're trading just the index along on the futures, you also want to know where your targets are and where you can place stops around. So again, the tone of the marketplace, the tide of the marketplace, drill down farther into the inflection points, and then, what's your risk reward scenarios? If you're looking at this relative to trading underlying instrument stocks alone, again, it's the first course of action is, what's the tide of the marketplace? We've got 4 different time frames here. We're actually putting something pretty cool in here, by the way. We're putting our long stocks candidates, short stocks candidates. We're putting a nice grid up here that, hopefully won't, you won't have to use these pull downs anymore, but it'll also be a little bit of an algo to pick out things that are ripe opportunities on the long side, short side, and hopefully make it a little bit more Betty Crocker, which I like. I always like Betty Crocker. But here we go. if you're drilling down into the instruments alone, you still want to start with what's the tide of the marketplace, and then be able to use the scanner to try to pick out anomalies that are going on. And, thirdly, where are the entry points and the exit points on those underlying instruments? So that being said, let's take a look at the S&Ps. We've got a lot of news out of China. They're still throwing new kitchen sinks at it. They've got plenty of tools in their belt. But I think you step back from this for a second. Here's our 240, and here's, again, just a review if you guys haven't been watching this, or people that haven't been watching the show on a day-to-day basis. When we talked about 2085 on the daily, let me go back and reference that. That's where we had to get the conviction in our mind, the confidence to start laying shorts out again. We got chopped up a little bit here, and it was getting frustrating to the point where I was, beating the desk about maybe we should look at this with a short future long call in the money play. And I'm actually going to revisit that later today. We talked about it. We pegged it out. We talked about, buying the in the money calls, I think around 2060. And these were when the futures were trading about 20, I want to say 2080 to 2100, somewhere in there, because the theory is, we're probably setting up for a big move, tired of getting stopped out. Let's put on an insurance plan where we know what our downside is with unlimited upside. I never thought we'd go that quick in that short amount of time. But what happens is, and we talked about this ahead of time, we get a move in our direction that we want. Let's say we don't get a move in our direction. That's fine. That's trading. We know our downside. We get a move in our direction. In this case, on the short side, the VIX is going to explode. So the calls are therefore going to hold their value a little bit more than they normally would in a relatively docile environment. And you're going to get just ring in the register type situations hardcore on the futures on the short side. So what we're going to do after the second break is we're just going to take a look again at that play that we talked about. And I think we were looking at September calls, September in the money 2060s relative to being short the futures at around, I want to say 2085. We'll just pick that back out again. I think that's what we had settled on. So again, what do you do with this thing now? Yesterday's close was just very bad for people thinking that this was the V bottom. And, we talked yesterday morning. In fact, sometimes you got to throw the rules out the window when you have a gap up of 600 Dow points or previous day gap down of 1,000 Dow points. You've got to look for reasons to kind of, be able to try to make some points on the gap itself. So as we look at this, just a second. As we look, my tech guys were asking me if we were looking at a certain thing. All right, here we go. As we look at this, we talked about the gap up yesterday and the eventual sell-off that happened. I'm not a big fan of being in these things overnight too much. And if you're going to do that, you just better have some stops in. But right now we're coming up into a resistance area again. And that resistance area is at around 1909, 1910. And why is that the case? That's because we've got an unfair low on our 240s. We've got nothing to hang on to down here. And the reason I'm still looking at this from the short side is on a long-term basis, we don't have any new profiles attempting to appear here. That's kind of a continuation pattern in itself. On the weekly, obviously, there's nothing going on there. And on the 60, we've got 1900 and 1909, 1910 on the 240s. So we've rallied back up into some areas that need to be paid attention to. We're kind of in that DMZ, if you will, on the only thing that we can grasp onto, the 60s and the 240s. So again, you're saying, oh God, a 10-point range, that's like a whole day's move before. Right now, that could be considered a 3-minute volatility range. And that's why we're talking about trading lighter, because these things are going to, you guys have seen what's happened lately, so I don't need to go over that again. So the fact of the matter is, this thing could spin around down here. This is our daily. This could consolidate and kind of form one of these pennants. I think the volatility is going to start contracting today. So if we form one of these flags or pennants or whatever, I call them consolidation areas, that's a continuation pattern in itself. And, we don't have to do that, but I kind of feel that what's happened really in general on the fundamental side and the technical side, the fundamental side is, we had the optimism built in. The market had Teflon on it without question. Tom was, very right in continuing to, this thing's going to break and it's going to be ugly. That happened. And the arbitrage mechanism in place between the optimism and the Teflon coating and it's all kind of having to reprice itself now without question. So, where's the fair market value of the S&Ps right now? Joey talked about, the 1700 area, 1750, 1680, 1700, somewhere in there. I mean, you can't really peg it, but, the technical downside on this is, in my opinion, around 1750. Again, that doesn't have to happen. Make sure your stops are in. And, what we're looking at, talking about those numbers right now, is we're still going to stay in a short bias mode. We're still going to pay attention to this information that I'm showing you right now with our odometers and our breadth situation. Now, this is pre-market, and a lot of these stocks haven't opened. You might be saying, well, God, futures are gapping up again. That's just kind of the way the world turns right now in the morning. They're gapping up or gapping down significantly. But we're going to pay attention to this when the market opens, and we're going to pay attention to the inflection points on the index itself. And if you're looking to do stock plays, you want to use this scanner to try to figure out what is showing its hand early as weak or strong, right? So, what does that mean? We're going to go through some of those examples of stocks that are showing their hand on a relative strength or relative weakness basis after the next break. And we're going to get into that option play after the following break. So we're going to leave that alone for a second. And we're going to also talk about some of the relative instruments out there or stocks that have a bearing, or instruments that have a bearing on what's going on with the broad stock market. We're going to take a look at the euro again, too. I mean, this has kind of been, my project, if you will, to try to figure out areas to short this. The last battle point we picked was around 114.67. That didn't work out. I got stopped out. We talked about having to get back down below that number. We're back down below that number. I like the action here. And now I'm looking at stops above 114.67 again on the euro. I love this trade. I think the safety play in Europe is ridiculous. So we're going to talk about that a little bit more too. And on the 240s, we're getting that breakdown also. All right, guys, we'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We had talked about an option trade a while back, and this is obviously one that's worked out, and that's the only references I ever do is the ones that work out. Just kidding. We hope we covered crude oil enough. I was kind of bullish on that one for a little bit of a pop, and that obviously didn't work out that well, but that's what stops are for. But this is what we're looking at here. When we start talking about this trade, I think the 2060 calls are around 45 before the S&Ps broke. This is the chart of the 2060 calls on the S&P. Now, as you'll notice, we've pretty much evaporated to nothing here. And that hedge is really not a hedge anymore because the deltas are so awful, so minuscule. They're not one for one, put it that way. So what we had talked about, and here's the 2060s. We had talked about, I think when the S&Ps were around, said before, like 2085, 2090, something like that, we had about 20 points of fat outside of intrinsic value. What does that mean? That means I think the options are trading about 45. We were in the money about 20 points, 25 points, I think. So 2085 minus 2060 means 25 points of intrinsic value. If the options are trading 45, then you got 20 points of so-called fat, which is implied volatility, time, decay, and the intrinsic value has already been defined. So the fat was 20 points. All right. The theory was if we move up, we're going to go not tick for tick on the fat still being there, but September. I think we were looking at September 18th, weren't we? Let me see here. Yeah, September 18th was and is the expiration date for September calls. So the theory there is, or was, we probably, on a big move up, we probably got about 7 points of fat that was going to go against us. All right. It's an unlimited upside trade. All right. So now what's happened? So let's just say the S&Ps are at 1900, which is kind of a midpoint lately for the volatility. So from 2085 to 1900, that's 185 S&Ps relative to 7 possible. That's a risk reward ratio I'll just love to write home about. But, what do you do with it now? The cool thing is now, in my opinion, you're looking at this trade, you get the massive sell-offs. Now you're basically, in this type of scenario, able to basically take the calls off, which are just ridiculous to even, you could leave them on, whatever. But now you could possibly start shorting premium against those S&Ps on the downside, because remember, the puts in this scenario, let's just kind of, show you how ugly this situation is relative to the VIX being pumped up to the moon. I'm sorry, I had to look at something else. Let's just take a look at the 1900 puts for September. They're worth $50, guys. So 1850. You sell some premium again, which could happen in a matter of hours to get down to that price. But if you're short the futures, selling some premium even closer to the money, 1900, or even, God, look at this. The 1850s are $34, $35. So again, you can do some kind of interesting little plays with this, with the volatility happening like this. You can sell some premium against the short futures. Obviously, the closer you are to the money, the more tick for tick, those are going to kind of be a hedge. And you can also try to figure out, if you're biased a little bit towards the short side, which I am still, how to even buffer some things up top. And you can look at that equation, put it in an Excel spreadsheet, watch, you got some DDE links from a lot of these platforms now, and that means that you can run the data feed directly into a Excel spreadsheet that's enabled usually on every platform to just put your own scenarios in and play around with them and watch how they unfold. This is a great time to do that, guys, because there's so much, the VIX being so high, there's so much, fat in these things now that you can really see how these equations unfold. I'll do one for you later today if anybody's interested in seeing that. If you guys have any questions in the den, continue to ask them. Feel free to do that. I will try to answer them. I don't give out the numbers for call in because I forget all the time. But we're going to give out those numbers when we come back, guys. We got about 10 seconds before break. They're on the homepage of the TFNN website. And we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, guys, had somebody want me to take a look at gold and silver, obviously. Let's take a look at December gold. We're right at a pretty serious area here now. I talked to you guys recently about this 1160, 1168 area being resistance, being the target up top. I'm not a big fan of going long gold right now. Haven't been a big fan, but when we got into this hole in the marketplace above, what is that unfair high? I'm showing it right now, 1125, the top of the box, so to speak, on the weekly. The reason we were kind of talking this rhetoric was, you've got 1168 daily and that weekly 1160 area and nothing in between. So when we started eclipsing that 1125, we had what was called a hole in the marketplace. Theoretically, markets move quickly through those holes because market participants in the past didn't pick battles in those areas. All right. Let me say that again. Hole in the marketplace equals fast market movement equals that's when you want to be considering, good opportunities to trade because you've got kind of a compression in time relative to the volatility. All right. So what's going on now? Gold is sitting right at the top of our profile here, 1126, 1127 on the daily, and actually sitting right at the top of this profile, 1125 on the weekly. So we've kind of satisfied the crazy movement within. I'm going to go to our scanner right now. and I'm going to pick up the excuse me, I'm not on the S&Ps anymore. Let's go to gold, and where's gold? There's gold. All right, so as you see, we're at the top of the box on the weekly, top of the box on the daily. Didn't need to look at the charts to figure that out. We got it right here in the scanner, and we're just revolving around there. This is kind of adjusting real time here. Here's the level of the market, this yellow line, and we're sitting right at these inflection points. So that 1160, 1168 area was obviously something to play around with. They'll at least take off some longs if you had caught that move up, the breakout above 1125, which I passed on. That was, again, something I'm not that comfortable with. But right now, you've got an area that we could bounce from. All right. So if you're going to if you are long-minded gold, you can't ask for a better area to pick a battle, considering what I'm showing right now and these two things that say top right here. All right. The problem is you got to orient stops here relative to these inflection points, and that's based on your appetite for risk. The other side of the coin is, and I'm not a big fan of really being very longish gold right now. The other side of the coin is if you're considering being short, which again, this was a target environment from the 1160, 1168 area for the shorts, and I was, again, not wanting to be long this thing. A daily close below this 1125 area is just going to be not that cool for gold. All right. We got a really thin profile that's appeared on gold today. And what does that mean? That means that you more than likely don't want to trade within this profile. All right. You want to wait for breakouts. All right. So the technical damage to close below 1125 is not going to be the end of the world for gold longs. But again, I think you want to wait until we eclipse that 25-27 area, if we close below there, to look at this from the long side again. All right. I'm kind of throwing out all other indicators and just using these inflection points. It's a great environment to make quite a few points in a short amount of time on a lot of instruments right now. I don't have to tell you that. But again, here's the weekly just to revisit this. And I haven't seen a lot of, big time divergences going on in this. And, it's a battle point area to be aware of, 25 to 26, 27. So again, a daily close is going to kind of, to some degree, guide me on this process. Right now, I'm not a big fan of just buying the dip on gold. And we've reached some targets down below on the short side. So here's a look at silver, taking a look at September silver. All right. As you can see, we've stayed below profiles last week. We almost got to that point. Silver's obviously acting a lot worse than gold is right now. And I've been, kind of telling you guys that, not a big fan of being long either one of these products, and breakdowns below 1457, 58 have to be looked at as a breakout breakdown selling point. And what do you do with it now? If you're considering trying to bottom fish on silver right now, you may get a couple little points up if gold bounces off of that, just in sympathy off of that 1125, 1127 area. But again, I think that's a relatively risky trade. You might want to wait a little bit on this one and wait for another profile to appear. You just got the first hint of the breakdown here, and there could be some more follow through with silver. Remember, things in this environment don't have to make sense fundamentally at all. All right. There's some technical damage going on across the globe on a lot of products. And, don't try to overthink this thing fundamentally right now. You watch this TV, you'll lose all your money. Seriously. You listen to those very seemingly in-the-know people on CNBC, and I hate to bash it, but I've seen a lot of people getting taken out in body bags listening to those guys yap their mouth. You stay tuned to TFNN and listen to guys like Larry, Basil, David, Tom, Steve Rhodes. They're going to give you a lot more technical information that, in my opinion, is a lot more valid than to try to catch the latest talking head with the tie and the white shoes. It's utterly ridiculous what comes out of those folks' mouths sometimes. All right, so we're looking back at the S&Ps, and we talked about the first battle point area around 1900 to 1910. We've gone a little bit too far above there for my blood on the upside. You're going to have to kind of wait patiently. Taking stops is a part of the game right now. We busted through the 60-minute unfair lows and the 240-minute unfair lows. And right now, unless we get some new inflection points, the next stop up could be to really lay the wood to this thing around 1945, 1948. Remember, it can do things like that. All right, it can make moves like that in this environment. Let's read the den here. What's going on? Yeah, I couldn't believe it. Amazon's going to do a 1-hour guaranteed delivery of alcohol. That's just I don't know how to react to that. Let's take a look at the NASDAQ. Let's see here. Okay, so similar situation on the NASDAQ. Next stop up could be 4204, and you're going to have to either wait till we get above 4204 or get back down below 4106. Very similar situation as the S&Ps. No new profiles attempting to appear. Market not extremely concerned about these rallies, in my opinion, being valid relative to profiles. So the big inflection points on the NASDAQ, 4106, 4204. I'm going to go back to the scanner. I'm going to go to our NASDAQ futures right there. And that's where we're at. There's that 4204 sitting up there. There's that 4106, 4106, okay? And if you want to get a little dissertation, click that button. We're always enhancing this, by the way. We're actually putting a couple more indicators into that database. But right now, I think it's pretty self-explanatory. The whole premise of this is to not have to totally rely on charts all the time and to use these color-coded cells. But I like to reference the charts for you guys on the show here. All righty, let's take a look at the DAX really quick. We're just going to try to keep covering the globe, and we're going to take a look at Asia in a second. Resistance areas on the DAX, new daily profile, 10,395 up top. Here's the short-term numbers, 99.89 sitting there. So you either want to rally up to that point up top or get back down below 99.89. Again, I'm looking at this from the short side. We could have a little bit of a bounce today, guys. So don't, all days aren't just continual short days. Some days you have to take your medicine, taking a certain stance, but don't make that medicine too big of a bottle. I just can't, I probably sound like the bearer of bad news all the time talking about stops, but it's a part of the game. Get used to it. Don't let things run away from you. And if you've had some trouble in the past with that, we all have. You're not alone. Regroup. Get back on the trading plan. It's happened to all of us. Every guy who is on TFNN, we're not machines. Regroup, get it back together. A lot of times, when I was in Chicago, I'd clear the deck and stay away from the market for a couple of days if I was getting, hurt a little bit. Clearing the deck, it feels a lot better, and the pain completely goes away when there's no trades on. So if you've had some issues here, that's not a bad idea, especially in this volatility. All right, let's take a look at Shanghai really quick. Here's that close below, that 35.54. That was really important, and kind of where we headed now. The sentiment in China, it was just way out of whack with what actually was going on fundamentally, and a lot of this is going to have to get arbitraged back to reality. Going back to the weekly for a second on this, let's say there's bad economic conditions on the horizon, continue to rise. They, give the margin fluff abilities to the individual investor, relax margin requirements, all that kind of stuff. This thing could come back into 2,400 very easily. Be prepared for that. It's not going to be a straight down move, but that probably is in order relative to what needs to be arbitraged in China right now as far as the price of the Shanghai. That's not going to be extremely palatable to folks in the U.S. seeing that happen. But again, the U.S. is holding up relatively well, all things considered, to some of the things going on in China. Let's take a look at crude oil. All right. So here's the October contract. And again, got a little bit of a hint of maybe a stoppage here on the downside. New profile attempting to appear. We talked about trying to pick a battle above that 41.75 on the September contract before. That didn't work out, and we never actually got back above there after we broke below and closed below. So here's the situation on the 240s. Any pops back up above 39.65 could be bought, in my opinion. But again, you've got better things more than likely to go long if you're trying to find things to go long. Here's the XLE. I'd really like to see a new daily profile appear on the October contract on oil to really start getting any bearing on what to do there. And I'm just going to revisit the scanner so you can kind of, there's crude oil starting up. There's that 240 sitting right at the top of our 240 profile, starting to show some green shoots. And there's that yellow peel back happening that we just talked about. New profile attempting to appear. A couple of signs there that may be okay to nibble on the long side. I'm not a big fan of short and crude here in the hole. Here's the XLE. There's that area that looked kind of attractive to me about the XLE turning around and possibly leading crude oil a little bit higher, or just a hint that, we talked about showing the trades that didn't work out. This is obviously one that didn't work out here, and the XLE is just continuing to get hammered. Let's take a look at Halliburton, some news on this stock, talking about the XLE. Excuse me. A little bit of a bump this morning, kind of sympathy with the market situation. Here's the weekly. And this scanner, again, no mystery to anybody. Some of these oil stocks have just gotten creamed. But 43.07, just to show you how powerful these inflection points are. I love to orient stops and targets around them. What do you do with this now? Do you pick it up? I'd rather see oil start having some technical turnarounds on the crude oil chart, on the October chart, to really start looking at this from the long side at all. I don't think it's on sale yet. Let's take a look at IBM. Trading 144 pre-market. This is one closed at 140, 141 yesterday. I still think this one has got a chance to go sub 100 no matter what happens to the marketplace. That's not going to be good for the indices, the Dow in particular. There's the inflection points to pay attention to in IBM, 143.12. You've got way better stocks to go long than this one if you're looking to go long a stock right now. This one going to continue to have problems. Let's take a look at the Aussie dollar. This is one Joey was kind of beating the desk about. We're more than likely going to continue to head lower on this. We got that retracement all the way back, almost up into that 72.76 area. We're going to talk about this a little bit further when we come back from break here.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, what we're showing here is the US dollar and 95.30. That's that big number. We closed below there. All bets are off on the long side when that happens on a weekly close. Got to sit tight. I'm not a big fan of shorting this, but I'll tell you what, for guys out there who are short-minded, you've got a little bit of a ripe opportunity. We've rallied back up into 95.30. I'm just waiting to see if we get a weekly close above that area. Again, I'm not a big fan of shorting the dollar. Here's the short-term 240, a little bit of a turnaround here. Short-term support 94.23, and I personally like to see this thing close above 95.30, but that remains to be seen. I'm kind of laying off of that until that happens. All righty. We got about 3 minutes left. Jeez. All right, let's take a look at something else I got to cover here. I want to go back to gold for a second, just to reiterate what's going on here. We're sitting right at the precipice, right at a very critical point. I'm going to go back to my scanner. I'm going to go back to we were talking about the Aussie dollar. Again, in my opinion, I think we're easily going to get into the 60s on this. You got all the inflection points to pay attention to on the Aussie dollar right there. That's where we're at. As we take a look at We got a lot of work going on behind me today. Got people painting the house, so excuse me about that. As we take a look at gold, what I was going to do is reference the scanner. We're going to go back to our futures. There's gold, top sitting right there. This is our landscape view sitting right in the DMZ. Talked about that earlier. And let's go back to the S&Ps really quick before we get off the air here. All right, so we talked about 1900, 1909. We're obviously eclipsing that area. We got to get back down below that area to look at this from the short side. In my opinion, we're going to consolidate, and almost squeeze into a little bit of a pennant down here. That's probably what is ultimately going to happen. I think where the volatility is going to calm down a little bit. But you've got 1945, 1948 up top. If we can get a rally up there, I think you can just lay the wood to it hard on there, or get back below 1900. 1909 would be something to play around with, but clean and clear of 1900 on the south side is going to put me back in short mode, or rallies up into 45, 48. I know that's a huge span, but short-term numbers still have that 45, 48 up top, and then down below, getting below 1900. So right now, not a lot of leverage up here. We could just kind of move around pretty violently, actually, in a very short range here. Not a lot of direction in this. I don't think anybody's taking big stances on long plays right now in the market. A lot of portfolio managers are more than likely going to be sitting on the sidelines right now. And let's revisit the NASDAQ. NASDAQ numbers, 4106 and 4204 up top. Getting below 4106 is going to put me back in okay to be short, not okay to be long. And then we've got rallies up in 4204 as the inflection point on the NASDAQ to pay attention to. Canadian dollar, want to reference this one. This is something that, again, I love this trade still from the long side, the devaluation of the Canadian dollar. There's the weekly. Here's the daily. You got support at 132.13.14 now. That's where you're going to orient stops below on the Canadian dollar. Guys, thanks for joining us today. Larry's next. Stay tuned.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.